Hi and welcome everyone, and thanks for joining us on today's webinar on Ireland's new automatic enrolment retirement savings scheme called the My Future Fund. So this has been a very interesting topic. We've had a lot of questions over the last few weeks and months in relation to as you may or may not be aware, the My Future Fund has been due to start at various different times. So firstly in September 2025, and then it was pushed back to January 1st, 2026. So it is confirmed for January 1st, 2026. So we have a few months now to get ready for this. So it's a huge change. I'm sure there's lots of questions. We've received lots of questions as this affects every employer in Ireland, whether you've one employee or 101 employees, it will affect you. So our team of consultants are fully briefed and prepared to answer any questions that you have on the My Future Fund or auto enrolment. There'll be additional questions, I know, in the lead up to this. And then once the scheme is actually in place, it will also bring more questions. So we'll do our best to answer those in the time that we have today, which will take us up to 12:30. Breda, my colleague, is here and is going to answer some questions that we've been receiving in recent weeks. So I'm going to put those questions to Breda and she'll provide the answers. Likewise, if you have any questions, please feel free to pop them into the questions bar, either at the top and bottom of your screen, and I'll or Breda will do our best to answer those for you. So just for anyone who is not a client of ours, to introduce everybody that's here today. So my name is Martina Macaulay. I'm a co-director of HR team. I am joined by my colleague Breda, who's also co-director. And I'm joined by Dermot, who is the business development manager, who is going to go through some points at the end of this morning's webinar with you as well in relation to the next steps. So we will get cracking in terms of the questions that I'm sure everybody wants answers to. And just before we get into those, just a reminder that this pensions can cover a lot of different aspects. It's multifaceted in terms of the departments that it will affect, from payroll to your accounts to your HR, and we're looking at it this morning from the HR perspective. So in terms of any tax related questions or payroll specific questions, those are something that would need to be put to your payroll or account specialist. So we will be focusing specifically on automatic enrolment from a HR perspective. So Breda, that said, let's start with the basics. Who actually has to implement auto enrolment?
Okay, so all employers in Ireland, regardless of their size or structure, will be required to facilitate the scheme, and this is a major change for employers, huge cost for employers as well. But employers will be required to facilitate the scheme for employees who meet the eligibility criteria, or indeed for employees who choose to opt in. And this does include small businesses, SMEs, family businesses. So it's important that employers do act now to ensure that they do have appropriate systems in place to prepare for it. It's called the Auto Enrollment Retirement Savings Scheme, or My Future Fund. It will start on the 1st of January 2026. So really only a couple of months now to get prepared for that, and even less when you think that employers do need to register with NESRA as of, I believe, the 1st of December. So all employers, it applies to all employers. There is no restriction in terms of size or structure, anything like that. So it's important to start preparing for that now.
Absolutely. And, I think you'll walk us through it later, but there's, in terms of Employers, it's important to note that there will be fines for employers that don't act on this or try to prevent employees from joining or encouraging employees to opt out. So it's important to ensure that you're fully compliant with the scheme. That said, then Brita, how can employers prepare now?
Yeah, so the first step for employers really will be to register their organisation with the National Automatic Enrolment Retirement Savings Authority, or otherwise known as NESRA. So once that system opens, as I said, I believe that is the 1st of December, an employer will need to register their details. So that includes the company registration, their tax number, their payroll information. That information is then shared automatically with revenue, who will consume that data. They will then provide that to NESRA along with the employee earnings data. So, what NESRA will do then is they will use that data to assess which employees meet the eligibility criteria for auto enrolment. And what they will look at is whether employees are aged between 23 and 60, if they're earning more than €20,000 per year across all employments. They will ascertain that the employee is not currently in a pension scheme and not earning over €80,000 per year. So those are the four criteria. An employee needs to be aged between 23 and 60, earning over €20,000 across all of their employments, not currently in a pension scheme, and not earning over €80,000. So I suppose the key for employers is that they won't need to calculate eligibility. You will be glad to hear. It will be determined automatically through this data exchange between revenue and NESRA. And from a practical point of view, what can employers do to start preparing now? What you can do is you can review your payroll system to ensure that you have an appropriate and suitable payroll system that can handle the new contribution process. Also, making sure that your employee data is accurate, such as PPS numbers and PRSA classes are accurate and up to date. Also reviewing any pension schemes to confirm who is covered. And then really from a HR point of view, and this is where we come in and where we can really support your organization, is getting ready for employee communications and ensuring that employees are notified appropriately regarding this auto enrolment and they know what the policy is regarding auto enrolment as well. So, in summary, you need to start to get ready as an employer to register with NESRA, and then revenue will share that data, and eligibility is automatically assessed. It means that much of the administration will be centralised and done for you, which is great from an efficiency point of view. It's also important to note, actually, that employers will be obliged to meet a deadline as well to make contribution payments to NESRA. And that's normally around when the net payments or salaries are made to the employees. So you will be provided with information in terms of how you make those payments to NESRA at the time of registration.
Perfect. So basically, in a nutshell, revenue will look at who is on the payroll, assess if they're already contributing. If they're not, they meet the eligibility criteria. They'll share that with the pension authority, who will then commence the appropriate deduction. So, from my perspective, that was good news for employers because it takes a lot of the administrative burden
Yeah, yeah.
off them. So who counts as an employee? Is this all employees within an organization, fixed term, full time, part time, self-employed individuals? Who qualifies?
Yeah, so an employee is defined in the same way as it is for tax and PRSI. So someone who works for and is paid by the employer. Basically, any employee who you have on your payroll system and they are processed for PRSI. So it includes apprentices, permanent employees, obviously fixed term employees. Um, if they meet the criteria, I suppose the key factor for employees, if they want to do a manual assessment, is applying that criteria. So the age bracket and the earnings and whether or not they're currently in a pension scheme as well. So if they meet the criteria, they will be automatically enrolled subject to that eligibility criteria. And the key is that the individual is subject to tax and PRSA as well. So yeah, I mean, basically any employee who you have in your payroll and subject to that eligibility criteria.
And what about new employees then? Will they be automatically enrolled straight away, or will there be a waiting period?
Yeah, so there is no formal waiting period. However, with new employees, if they have no previous earnings record, or for example, if an employee has a gap between jobs, it may take up to 13 weeks while revenue confirms whether they are likely to meet the annual threshold of €20,000 per year. But I mean, in short, yes, if an employee does meet that criteria, they are enrolled automatically and there is no formal waiting period. It's also worth noting under the forthcoming retirement savings scheme that the NESRA will assess employees' eligibility on a rolling basis using income information supplied by revenue as well. So they do that quite regularly.
And what about notification to employees? Because that's something, especially from a HR perspective, we've been asked quite frequently, what do employees need to know? And do employers have to do anything? Do they need to notify their employees, or what should they do?
Yeah, so absolutely, employees should be notified, and employers are legally obliged to let employees know once they've been automatically enrolled to confirm all of those details and the date that the enrollment takes effect as well. So, from a HR perspective, it is really important to handle this clearly and consistently. Employees likely will have heard a lot of noise about this in the media, online. And so, to develop good communication will help employees to understand what's happening with their pay, how contributions work, and what options they have. So, for example, if they would like to consider opting out of AE. So, even though NESRA will manage the system centrally, and employees will have access to their own dashboard via gov.ie. Employers will still have a duty to provide written notification to employees once they've been enrolled, to keep this information on file within a personnel file, and to notify employees as well if their eligibility status changes. So, for example, if their earnings fall below the threshold or if they leave employment either. So, I suppose to support compliance, HR team will be providing all of our retained clients with employee notifications and a lot of other template documentation as well that you can use to ensure that that communication requirement is met. And while much of the administration will be handled centrally, we would say that your HR department, or if you don't have a HR department, management will still play a key role in ensuring that communication is maintained really, really clearly with staff. From an employee engagement point of view as well, and transparency, that is really important.
Absolutely. And I know one of the things that has come up, when I'm speaking to employers is obviously it's great for employees, and that these pension schemes are being implemented. But there is a concern from employers as well in terms of the costs that
Yeah,
this might bring, and minimum wage is set to go up again, and at the start of January, there's over the
yeah.
last few years we've seen the introduction of SSP, and now, we have this again, another cost for employers who might be already struggling. So could you take us through the contribution rates that employers will have to pay?
Yeah, and that is very true, Martina. That's a genuine concern that employers have regarding the costs. And I suppose if we can approach this in an efficient way, there is unfortunately, no avoiding it. But in terms of the contribution rates, yes, the system has been phased in gradually over a period of 10 years to give employers and employees time to adjust to this. So at the start, the contribution levels will be at 1.5% for the employee, 1.5% for the employer, and 0.5% is what the state top up will be. So a total of 3.5% of an employee's gross pay. It increases then at year 4 to a total of 7% of gross pay. And at that stage, the employer contribution will increase to 3%. The employer contribution then goes up to 4.5% at year 7 and 6% then at year 10. Ultimately, it's a 14% total of gross pay overall between the state employee and employer. But so 1.5% it starts at, then up to 3%, then 4.5%, then 6%. That's employer contributions. The contributions are calculated on gross earnings up to 80,000 per year, and anything above that is not included. So by the time the system is fully up and running, that combined savings rate will, as I said, be around 14%. From a HR perspective, we would definitely encourage employers to plan ahead for this gradual cost increase and factor it into workforce budgeting as well over the next few years. So, if employers are planning on growing their workforce and recruiting employees, obviously there are the obvious costs like salary and annual leave or holidays. Statutory sick pay, pension costs will also need to be incorporated into that from day one now as well.
And some employees already have pensions in place. They might have contributed to a PRSA or have a personal pension scheme in place. How does this affect those employees?
If it's a personal pension scheme, or a PRSA or another private retirement savings plan, that doesn't automatically exempt them from the new AE system. It very much depends on how that pension is managed. So if their existing pension contributions are made through payroll, then that will show up in revenues data. And the employee will not be automatically enrolled into the new system because they don't meet the eligibility criteria. However, if their personal pension is arranged privately, so for example, if it is paid directly to a financial provider rather than through their payroll, then that will not appear in revenues records, and so the employee will be automatically enrolled if they meet the age and earnings criteria. If the employee in that case chooses to opt out of the new system after the initial 6-month period, if they prefer to continue with their own private arrangement, then that's fine. They will be automatically enrolled if it doesn't show up in revenues data, but they can opt out then after 6 months. In short, if it's payroll linked, then they won't be enrolled again. If it's outside payroll, then they will have the option to opt out once the scheme is live after 6 months.
Yep, and I think, you know, from my perspective, it's really in the simplest terms, I think, as you're explaining there, is um, that revenue is going to review the payroll systems, see who,
That's right.
in the simplest terms, who's in a pension, who's not,
Yeah.
and and report based on that to the pensions authority. However, to be mindful that this is an evolving landscape, and there will be further regulations over time, because this is so multifaceted that over time there will be further regulations, and the government's allowed a 7-year bedding in period for this to get everything in order. So unfortunately for employers, this is a space that you will have to continue to watch over time as the regulations continue to come forward. So something else that we've been asked about, Breda, is what about employees in another country, so that have a pension from that country, but are paid through Irish payroll. So they have a pension previously or ongoing in another country, but they are now working in an Irish employment.
I suppose it goes back to the eligibility criteria then, so if revenue data doesn't show active Irish pension contributions, and the employee meets the eligibility criteria, then they will be enrolled in the normal Irish auto enrollment scheme as normal. So if they meet the earnings threshold, the age threshold, that there is no evidence via Irish payroll that they have a pension, then they will be automatically enrolled into the scheme.
Perfect. And if we were to take a scenario, and this has come up frequently, where the employers have said, okay, try to get ahead of this. We already have pension, provider. We already have a company pension scheme. Let's just automatically enroll everyone in our existing pension scheme instead. Can they just go ahead and just go, okay, if you're eligible under automatic enrollment, then we're going to go ahead and just put you into our existing pension scheme?
Yeah, this is something that we've been asked a lot in the last number of weeks, particularly. So if an employer already operates a pension scheme that meets or exceeds the standards of the new auto enrollment system, then that scheme can continue. The employer doesn't need to enroll those employees again under the new system. So what does this mean in practice? This means that employees already contributing through payroll, and that's an important point, to an existing qualifying scheme, they won't be automatically enrolled a second time. Employers do need to ensure that their current scheme meets the eligibility requirements that will apply under the new legislation. But where the company scheme does not meet those requirements, then eligible employees who aren't covered will be automatically enrolled into the state-backed system instead. I suppose from a HR perspective, it will be good to audit your current pension arrangements and identify any staff who aren't currently members, and then confirm which group will fall under auto enrollment when it goes live. Again, HR team will be providing guidance and template communications for or retained clients to help them explain this clearly to staff, and document which schemes will apply to each employee.
Perfect. And what about the opting out then? We know that employees can opt out. Um, how does that look?
So yeah, in terms of opting out, employees can opt out 6 months. If they meet the eligibility criteria initially, it's worth noting that they will be automatically enrolled into the pension scheme, but they will be able to opt out then after a period of 6 months, and there's a very short window between months 7 and 8 to opt out. At that stage, the once an employee formally opts out, the employer no longer has to make contributions for that employee. Um, and employees can receive a refund for their contributions. However, the employer and state contributions are not refunded. Um, and it's important to remember that the system does include a real enrollment feature. So employees who have opted out will be automatically re-enrolled after 2 years if they're still eligible. Um, Again, from a HR point of view, that means the payroll systems will need to track who has opted out and when, so that all happens seamlessly.
And can they opt out straight away?
Not immediately, no. They can't opt out immediately. So when an employee is initially and automatically enrolled, they'll need to stay in the system for the first 6 months. So during that time, contributions will be made by the employee, the employer, and the state. But after that initial 6 month period, there's a 2 month opt out window between month 7 and month 8. And that's the point where employees can decide to withdraw and have all their contributions refunded. So the idea behind this is to give employees enough time to see how the system works. That's the rationale that the government has incorporated into the legislation, and to prevent people from opting out before they've really understood the benefits of the system. Um,
Um,
yeah, and just it's worth noting as well that once that opt-out window passes, the month 7 and 8, they'll stay enrolled unless they suspend contributions later or opt out again.
Perfect. And what about employees that earn 80,000 per year over two jobs? How will that, if they have two jobs or they earn
Yeah,
over 80,000?
yeah, so that's something a lot of employers have asked as well, especially where people work part-time and want more than one role. So NESRA will be responsible for monitoring the total earnings across all employments. And basically, each employer will make contributions through payroll based on the employee's earnings from that employment, and then NESRA will aggregate the employee's total income across all employments. So this ensures that no one contributes beyond the upper income limit, and that contributions are kept consistently, no matter how many jobs they hold.
Perfect. And then we've spoken about opt out. What about if employees choose to opt in, those that aren't eligible, can they do that? The employees that don't meet that criteria?
Yeah, so if an employee chooses to opt in voluntarily, so that would be employees who don't meet that criteria, whether it be the age or the earnings. And if an employee chooses to opt in voluntarily, the employer will be obliged to contribute in exactly the same way as they would for an automatically enrolled employee. So even if someone is not automatically eligible, for example, if they're under 23 or over 60 or earning below €20,000, if they decide to join the system, then the employer and the state will need to match the contributions at the same rates.
So in terms of those kind of frequently asked questions, I have a few as well here just that have been asked whilst we're on from some of the participants. So just to take a few of them, if we look, what about non-directors? Would they be included?
Yeah, so again, if I suppose non-directors, what do you mean by that? If they're an employee and they are subject to PRSA and they meet the eligibility criteria in terms of the age and earnings limit, not in an existing pension scheme, then yes, they would be included in the scheme.
Exactly. So I think the most straightforward way of looking at it is if someone's on the payroll. So irrespective of their title or their status. If they're going through payroll, they will be
Yeah,
enrolled.
that's right.
So, I have another question here just in terms of a template letter. We do have template letters that we'll send out to all of our retained clients. And if you're not a retained client, you can speak to Dermot. Now we'll cover that now in a little while. And um, uh, another question is in terms of new hires, can we mandate in the contracts that they need to enroll into the workplace pension scheme instead? So another good question there, and it just touches on what you'd covered earlier. So you can't enforce someone to enroll in a workplace pension scheme. It has to be subject to their
Yeah.
agreement, and if they don't, then it will be auto enrollment.
Yeah, that's exactly it. That's exactly it. So it's a contractual provision is important there as well.
And just finally, someone has asked if they need to make changes to their terms and conditions of employment. Will we assist with that? Yes, absolutely. For our retained clients, we will be sending out information now that you can send out to your employees and a checklist as well
Yeah.
for getting it right. So
Yeah.
I'm conscious of time. I know there's a lot of questions. Any of the questions that we didn't get to, there's a significant amount of questions that have come in. We will come back to you on, or please feel free to reach out to myself, Brita, or one of the team, and we'll be only too happy to answer your questions.
Yeah.
So
Just
just.
I just one more thing, I
Mm,
suppose, just to add is in relation to the penalties.
mm,
I just want to mention this really, really quickly, and I know we are conscious of time, but a lot of employers are interested to find out more information on what those penalties are
mhm,
for non-compliance. And really, the question we've had is, what's the worst that can happen? If we don't adhere to the legislation. So, there are on the spot financial penalties up to 5,000
mhm.
euro per employee affected or per instant, or per breach. But for more serious or repeated cases of non-compliance, it can escalate to a criminal offence as well. So fines up to 50,000 or imprisonment as well. Administration actions. So NESRA can also issue compliance notices as well, requiring an employer to correct non-compliance and pay any unpaid contributions, and interest will actually apply as well. So obviously none of this has been tested yet, but those are the types of penalties really that we'd be talking about.
Absolutely. And it's the same as any other aspect of employment law. Ignorance is no excuse. So even if you do it intentionally or unintentionally, it doesn't matter. The fines will be the same. So yeah, very good point there on the penalties. And I suppose the purpose of information sessions like this is to ensure that nobody is falls foul of this legislation, and that we're prepared for it as well. So uh thank you so much to everyone for joining us today. We hope that you found this session useful. Please do feel free to reach out if you do have any questions. We'll be in touch with our retained clients directly, and we'll be providing all the support and documentation that they need, including those template policies, the contract clauses, the notifications for their employees, and any guidance to help with the rollout. So be assured we are there to assist. If you're not a retained client, we can also support with any assistance with automatic enrolment or any other area of employment law. In fact, I'll hand over to Dermot now, who can talk just a little bit more about that.
No problem. Thanks, Martina, and thanks, Brita. That was very helpful. And thanks again to everybody that's attended today. There's obviously huge interest in this at the minute. Um, because of that, we were offering everybody the opportunity for a follow-up consultation as well. So that's really just an opportunity. If you have any further questions from the webinar today on the auto enrollment, particularly as Brita said, on the HR or employment law related side to it. So we can have a discussion on that, or maybe there's something, a HR related issue that you want to discuss in confidence. or we can also, it's an opportunity to go through some of the services that we provide to the clients that we support across the UK and Ireland. So I'm going to send everyone an email in the coming day, and there'll be a link to my diary and that. So it's a Calendly link, and you can book in a 30-minute consultation there, and we can have a chat about it. So that's it really from me. We'll take it from there after that. And thanks again, everyone, for attending.
Brilliant. Thank you very much. Thanks, Dermot. Thanks, Breda. And thank you again to everybody. I hope you found that helpful. And as always, we're here to help if you do have any questions. And we will leave it there for now.
Okay, thank you very much.
Thanks, guys.